Okay. Hey, everybody. Happy Thursday. Katie Moe here, founder and realtor with Connect California Homes. It is Thursday, February 16th. We took a 1-week hiatus because I was in Long Beach for a work event, but I am back with my co-host, Jenna Gray. I'll let you introduce yourself, Jenna.
Good to be back. Yes, Jenna Gray Bennett, currently with Guaranteed Rate, mortgage lender of 19 plus years. And yeah, I'm super happy to be back. I love our Thursday morning talks. I missed you last week, and a lot's happened in between 2 weeks ago and now. So I think this is going to be a really good call.
Awesome. Me too. Well, I will tell you real quick. I was in Long Beach with my parent brokerage side, which is a national firm, and we had like 3,000 of the best agents from all over the U.S. The awesome spirit of collaboration and sharing, just the most amazing minds, abundant mindset, entrepreneurs and leaders. And I always walk away feeling super inspired and empowered as a business owner and as a realtor. So I'm fired up. I will do a quick plug. Magic Johnson was one of our keynote speakers, and he was so good. If you ever have a chance to hear him speak, please do it. And Jenna, it's really funny. When he was starting his business after his career, he had his first business idea was to buy a building, a multi-use building, and rehab it and kind of resell it mixed use. He went to 9 banks before someone would loan him money. Literally, he said he had to go to 9 banks, and the 9th one is the one that actually loaned him money. And this was when he was who he is, Magic Johnson, straight off the court, in retirement. And he's like, nobody wanted to loan me money, but they definitely wanted to take a picture with me. So, and then the cool part is he said he is still loyal to that one bank. He said that is the one bank that he works with from here on out. It was just, again, Magic Johnson. He is an incredible entrepreneur, an incredible businessman. It was great. So again, quick plug. If you ever get a chance to hear him speak, please do.
And that's one of the natures of what we do, right? I mean, I've had clients for the almost 20 years I've been in the business, and they are super loyal. I've helped them time and time again. They trust me. And I love that. I love hearing from clients that I've worked with over and over and over again, because it speaks to that relationship that we've built, that trust that we've built.
Well, and I would imagine in your position, and I see it too, but in your position, you get to see a lot more in terms of how real estate helps people build generational wealth, build personal wealth. And it is really exciting when you get to talk to I have first-time home buyers that then come to me, 7 to 10 years later and say, hey, we're ready to move, but we don't want to sell our house. We want to keep it as a rental. And I'm like, and it's so cute because they're always like, oh, we feel so bad. And it's like, are you kidding me? Like, that is the purpose. The purpose is to build equity, to build home ownership, to build ownership in real estate, because in California, it's just a great long-term way to build wealth. And so I love it when I see that happen. I'm sure you see that a lot too.
Some of my absolutely wealthiest clients are the ones who own lots of property, and they've hung on to them, right? I mean, they bought them in 2009 after the market crashed, and they've held on to them for, like decades at this point.
I mean, my dad used to say, like, we had a good friend when I was in my 20s, he would be like, you need to buy a house and then rent out the rooms to your friends, or you need to buy a duplex and then you live in one and you rent the other one out. And I wish my 20-something stubborn head would have listened, because so when I hear people in their 20s talking about doing that, I get really excited, because it's just such an amazing way to set yourself up for some long-term success and to give you really good options of what you can do with your life.
And you can buy multi-unit properties with FHA financing, 3.5% down payment. You can buy a duplex. Oh yeah, 3.5%. 3 to 4 units are a little bit trickier because there's a self-sufficiency test that it has to pass. So the rental income on 3 and 4 units has to exceed what the monthly PITI will be. So there's that self-sufficiency. So 3 to 4 units is a little trickier. But if it does, you can put 3.5% down on a 4-unit property as long as you are occupying one of those 4 units.
Okay, that is incredible.
Yeah.
Like, that is incredible. I know a young woman who's in her 20s who literally just said that same exact thing last week, talking about wanting to purchase a unit herself and rent it out, and to have 3.5% down and an FHA program. I didn't know you could do that for
Yeah.
duplexes. That's pretty incredible.
Yes.
Wow. Okay,
Yeah.
we got to talk more about that.
If you're conventional financing, the down payment is much more substantial. So for those buyers, first-time home buyers who simply don't have larger down payments, FHA is a fantastic product for that.
Are you seeing a lot of FHA right now? What are you seeing?
I'm seeing more of it. I'm actually seeing a lot of VA right now. We are a really big VA lender. I don't know if anyone knows that, but Guaranteed Rate's a huge VA lender. We waive our lender fees on VA. I'm seeing a lot of VA. I'm getting a lot of VA introductions.
That's great. That's really great.
Yeah. So government programs certainly back, right? When the market slows down, kind of the buyers who don't have a whole lot of down payment, they're looking for opportunity to buy.
Yeah. You, just real quick, I know we totally didn't intend to talk about VA financing, but since we are, because I know that about you, because I do have a buyer client that is working with you guys. That is a VA person. So what, from your perspective, just real quick, I'm gonna put you on the spot, like 3 tips for a smooth VA transaction, because I've worked with VA buyers as a listing agent as well as a buyer's agent. And what I have found, and again, you and I've talked about this, is that I feel like there's a lot of misinformation and or lack of education about the VA program. And I can't tell you how many times I've had to go to bat for my VA buyers and educate the listing agent about the program, because oftentimes they see that it's a VA buyer and they're like, oh no, we're not going to do it. It's too hard. It's not that way. So just what are, in your experience, 3, tips, if you can, about how to ensure a smooth VA transaction?
Yeah. Number 1, you must work with a lender who knows how to pre-approve VA, period. I had one come to me this last weekend. They were working with another loan officer who shall not be named, but this person talks about how they are a VA expert. They are on social media constantly talking about VA. And unfortunately, this person did not know how to pre-approve a VA loan. They were not calculating the income properly. One of the borrowers was self-employed, and this person was using 1-year taxes as opposed to 2 years taxes, which is required for VA. So the income they were using was inflated because the previous year was much lower. And so, and there were some other just holes in the pre-approval, and, gave the client pre-approval letter in hand. They're out shopping for a home. And then I think this person realized that they hadn't, checked all these other things. There are quirks with VA pre-approvals that you have to know. VA requires you to hit them for childcare expenses. They calculate student loans differently in the veteran's favor. If you're self-employed, they're going to want that 24-month history, not just a 12-month history. So there are these things that, you have to know when you're pre-approving someone. Now, all of a sudden, this lender's scrambling. Hey, can you file your 2022 taxes? Can you do this? Can you do that? And they just lost faith, right? They had this letter in hand that was basically garbage. So number 1, you must work with a lender who knows how to pre-approve VA. That is super important. Number 2, it's not as scary as you think. Sure, VA is typically going to require Section 1 to be done, right? But if you're looking for a property, maybe it's a little bit longer days on market, the inspection isn't that hairy, the Section 1 is kind of like not such a big deal, then it goes smoothly, right? You get the repairs done, a couple grand, that's usually what we see is anywhere from $1,500 to $3,500 on VA transactions, and you get it done and it's no big deal. So don't be afraid of that. Number 3, I can close a VA transaction in 18 to 21 days, no problem. Yeah. So, I mean, right now they're quoting 7 days for a VA appraisal in California. Certain counties are a little bit longer.
Wow.
But I can close a VA transaction just as quickly as I can close conventional or, any other loan product. So yeah, there's definitely a stigma. Listing agents look at it and they say, let's toss it to the side, which I really want to change because our veterans deserve more consideration.
Amen.
I mean, hello, right? Of anybody out there. And of
I
course,
know. I
like
know.
we really need to make sure we're taking care of our veterans and not tossing their offer to the side, making it impossible for them to get into contract.
That
So,
is literally, I get so defensive
yeah,
when I hear a listing agent really talk it down. And I think that, again, if there's any other realtors on here listening, if you are, I think that there are people who are scared of VA. And I think, like,
yeah.
your item number 2, it is not as scary. And for me, it
Mhm.
is, you have to be realistic. And some of that is the education on both sides. To your point, not every house will work for VA.
Right.
However, you can find the ones that do, and you just have to make sure that you exhibit confidence to the listing agent that you know what you're doing. I would never submit an offer on a house that I personally know would really be a challenge for a VA appraiser to really get into. And I think that for, again, people like working with someone like Jenna, this is where you have to have a unified team with your realtor and your mortgage broker. And I would say that whenever I have represented VA buyers, I lean heavily on my mortgage partner because there is so much information that is unknown. So
There's so much that goes into it. Yeah, on those types of government products in particular have all these different guidelines that conventional doesn't have. So two things I want to mention about VA, and I know we've kind of gone off on a VA
no, I
tangent.
love it. No, I love
Number
this.
one, we waive our lender fee on all VA. That's if the borrower doesn't have to be disabled, like some companies. If they're disabled, they waive the lender fee. We waive it across the board. The really cool thing about VA is that the seller can give the veteran enough closing cost credits to cover 100% of their closing costs,
Wow.
plus a 2-point buy down.
Wow.
Plus, they can give them 4% of the purchase price to pay down or to pay off debt. That can include credit cards, installment loans, student loans, whatever, auto payments, right? Auto loans. It can be for a Best Buy card. It can be, like anything like that. So they can get, I mean, realistically, they can get like 8% towards closing costs, buying their rate down, 100% of closing costs. There's no limit on that. Plus 2% point cost buy down, and also another 4% to get rid of debt to qualify. So I have one going right now where they didn't really qualify for the purchase price. So we're utilizing that 4% buy down of their debt to eliminate a bunch of their like debt and credit cards and things like that to make the home affordable, because now they can afford the monthly payment because they don't have this debt. And
Wow.
and they're also covering their closing costs. So
So
it's really got
do you
some
think,
cool
again,
things.
and this might be out of your wheelhouse in as the role you play in the transaction, but I find that when I've worked with sellers and they receive a VA loan, they we've been in the sellers market for a long time, and sellers have kind of been in control. And I think that sometimes when sellers receive a VA offer, they automatically think, well, like, I'm not in control anymore, because the VA program obviously protects the VA borrower, as it should. Um, is it really, I mean, is that a piece of misinformation? Like, you know, for me, I feel like a person is not going to write an offer on a house unless they really want it. Personally, I don't let my buyers write offers on houses unless they love the house and
Right.
unless they want it. So I would imagine that they're going to do everything they can to make the transaction. But what do you think about that? Is that really, like, are sellers relinquishing control if they get in a contract with a VA borrower?
No, I think what it's doing is it's leveling the playing field, right? It's making the transaction equitable for both parties. The seller's still going to get the price,
Yep.
right? And if the past work is nominal, no big deal, right?
Correct.
But they're still going to get the same price, but the veteran's going to be able to move into a home that, the pest of the section one's been taken care of. And as long as that's kind of like worked into the figures, it's same difference for the seller.
Okay. Yeah, that's what that's what I think, and that's what I say. It's just as we are in a shifting market where buyers have options and buyers have the ability to negotiate. One of our jobs as real estate professionals is to educate and help our sellers understand these things. And you said this earlier, average days on market is different. Buyers have more time to
You're
make
keeping in
choices.
contingencies. So
Yep.
what's to say your conventional buyer isn't going to get their pest inspection back and say, we want
Agreed.
this done. We want
Agreed.
$5,000 for the pest. I mean, it's
Agreed.
same thing, right? Like now
I
that
mean,
we
I see it.
contingencies are back,
Yes.
same
I would
deal.
say that in the last, 8 months,
Yeah.
every single listing I've had, the buyer has negotiated repairs.
Mhm.
So it's going to happen. Not to mention, I like working with people that have integrity and
Yeah.
want to deliver a good product. You should want to hand over the keys to your home or your rental or your investment and sleep good at night knowing that you didn't just put lipstick on a pig. I
Right.
just feel really strongly. And I understand it's not my decision, but I do appreciate when a seller says, "Oh no, I'm going to take care of that section one
Right.
because this is my house and I want to make sure that whoever is buying it receives a good product."
Right.
So,
And if you can do that for a veteran, even
oh,
better.
it's even better. Oh my gosh. Okay, so I love where that conversation went. Totally not planned. I think that was great. I think so. We're coming on. Where's the clock? We're at like 17 minutes, and we usually try to keep these to 20. I'm going to just share real quick, kind of along these lines. We talked about. I pulled some slides for a little bit of a market update. This is the first time doing this, people. We're feeling very tech savvy. So I wanted to share. We had a great call yesterday with Dave Stark with Bay East Association of Realtors. He's kind of director of policy and communications. He was looking at year over year. He shared a lot of detail, but this is specific to January. January's over. The numbers are in. And really what we're talking about here is January of 22 was really like no January of years past ever. Excuse me. So I've got a little bit of pricing. Again, this is just for January. So I think I included it on here. That's average days on market. Hold on. Home sold. Oh, I guess I didn't put median pricing on. I have it. Year over year, 22 to 21, our median sales price in all of these markets is still higher year over year. We still ended the year stronger than we did the year before. But what we're looking at is just what happened in January. So January of 2022 versus January of 2023, we did see changes. But we're still, when you look back at the overall pricing trends, we still are way above where we have been since pre-pandemic. So really in good shape. This one is super interesting that I wanted to show. Average days on market, the numbers are really hard and small, but all the way over to the left, the first data point is 45 days, average days on market in the East Bay, and that is January of 2019. So you can look and see where the peak was really when we started to hit the pandemic. And then look at where we are on the far right, 35 days for the entire aggregate East Bay. January of 2023, we're sitting at 35 days on market. People keep saying that the market is changing. Oh my God, blah, blah, blah. Well, guess what? We are still under where we were pre-pandemic. So the market is still in a very good place compared to January of 2019. Really good place. And then the last thing we're talking about, this is really one of the biggest snapshots that I think a lot of people are talking about is overall sales volume. And you can see, I think the number on the far, hold on, let me see if I can maximize my screen here. Okay, so 2018 on the far left, this is for Danville, Dublin, Livermore, Pleasanton, San Ramon. So in 2018, Dublin sold 418 units. These are homes, single family detached. San Ramon sold around the same number, or they were over 600. Pleasanton about 700, I believe. And then you've got Danville a little higher. And then the top one is Livermore. Their total units sold. You can see that for 21, we peaked really, really high. And then obviously for 22, our homes sold has gone down. So kind of what we were going to talk about, which we can save it for, is affordability. It's the number one reason that the total homes sold has gone down, that we could not keep up the pace of 21. But the good news is
nor
look
do
at,
we want to.
well, I say, nor do we want to. But if you
Yeah.
look at, just because it's on the top level and it's easiest to see, how many homes sold in Livermore in 2018? 954. 2019, 944. 2020, 999. 21, 1200. And then 22, 931. So if you got rid of 21, Livermore is still on par, you
It's a
know?
normalized market.
Absolutely. And
Yeah.
so I just share these because, you know, these are all from Bay East. They're great numbers. Just for perspective, I have a lot more of these data points that if people are interested about their specific communities, let me know. But I also caution you, as people start to release data about January and comparing it to January of last year, you have to remember that January of 2022 was a complete anomaly. So it's just a reminder to keep watching the trends. All of our markets have homes that are going pending, multiple offers. Once those start to close, we're really going to start to see how the buyers are feeling, how they're reacting to properties. It's still just very early on. So, but all really positive signs. Homeowners are still sitting on amazing equity, and buyers are able to negotiate. They're able to get contracts accepted, but they kind of still have to play a little. They have to be willing to work with the seller, which I think you and I have talked about in Coffee Talks past. I love this market because buyers and sellers are truly able to work together to create a great deal that both parties are happy about.
Something that's symbiotic. Yeah. In January, just for context, I easily got over 60 applications from new people, new buyers wanting to purchase, plus
Wow.
another 10, 15 past clients who were sitting on the sidelines who just wanted to re-engage and re-up their pre-approval. So
Yeah.
buyers are jumping back in.
I mean, last week when we were at Side by Side, the event in Long Beach, Rick Sharga spoke, who's an incredible real estate, you know, knowledge thought leader. And, you know, there's still a lot of people that are saying that nationally we're going to see some prices declining. But when you look at the local market data, it's not the same. And you also have to remember that David Stark reminded us of this yesterday. News reporters have to write the stories that people are going to click on and that people are going to read. So they're not sharing as many of just the happy-go-lucky Goldilocks stories. They're sharing the ones that are stressful, the ones that are high impact. So this is where, again, our complete objective is to share a local perspective of what is happening in our local market. We both really focus on serving our clients to the highest, serving our communities in our local markets, our communities where we live, where we're raising our families. So please, please, please do that. I end every session this way. Please remember to talk to one of us. We are here to share information or speak to a local realtor in your local market to get the true story.
Yeah, agreed.
Anything else to add? And then we can sign off.
No, I think you nailed it. We ended every time this way. I'm like, hey, stop listening to national news. It does not apply to our immediate market. So
yeah. Okay, awesome. We will see you guys next week. And again, if you missed it, I guess if you missed it, you'll be hearing it now, but we're going to put it on YouTube. So Share with a friend. Send us messages if you have something you want us to talk about. Please don't hesitate to reach out. Thank you again, you guys.